Hey traders, this is Dennis, aka Stock Operator. I want to make a quick short video about training. How to train your eyes, train your brain, doing paper trade exercise the right way, right? So we're going to talk about Snowflake. Snowflake had a nice breakout today. So stock was gapping up above the range, as you can see, prior day range. You can look and see what it did before. So you can put on a pause and look. I don't want to go back and show you, but we know it's gapping up. This is a third day gapping up, overly strong. Okay, market. You know, we're getting a bounce on the market. We're getting bounce on a sector. This is information technology, IT services. Snowflake on a bigger chart on a daily. Cup and handle and stuff like that, so you can look yourself. But what I want to show you is this: how can you paper trade and talk over it, right? So let's look at the 5-minute chart here. This is the lowest time frame probably you should go as a swing trader, day trader. The below 5 minutes, it's all a lot of noise, a lot of noise. So let's see, stock is opening wide range bar. It's very important to notice it's a wide range bar on a decent volume below the average. This is a very good sign. So then we have in a pullback on slightly lower volume. It's a very good sign. So as you can see, the pullback half point holding this moving averages cloud, and then the high is about 314.53. So we gotta look time and sales, see how the price reacting, and keep in mind you have to take this as a swing trade, but maybe taking a little bit of bigger size, kind of selling, having that bigger size and taking as a day trade, and selling some into the strength and then writing some portion for the swing. So stock is pulling back, and then what are we having? After that, we have a breakout, right? We have a breakout. How could you take this? You could take the breakout right here. Set your stop around this 312.50. So why? Because it's below moving averages, below the prior candle, and below this candle's low. If for some reason we're gonna undercut the bottom of this candle, you should be getting out anyway, right? So now, how can you ride this? How can you properly manage your open position without taking too many partials, and how can you leave some for the swing? So, first of all, this is our stop. This is our entry. Ideally around this 50 cents, right? We're risking about 312.50, 314.50, 2 points. You know the ATR for this stock is about 11 bucks. The bottom is 310, 310. We're already moving to 314. So you're already moving 4 bucks. So you have approximately 6-7 bucks to move, right, for this stock. 7 bucks approximately. So with $2 stop, that's pretty good risks to rewards. So you have approximately $7 upside, right? $7 upside on a $2 risk. So it's a 3-to-1. What is going to be 7 bucks from 314? It's not so hard to kind of manage here, this stuff, right? So it's about 321. That's your target. 321, that's your target. It's about 3R, right? All right, so let's go. Stock is having this wide range kind of dodgy candle, a little rest volume, then pushing strong, coming to 319, boom, coming close to 320. We want to see the 321 3R push, doing a little bit of pullback, rest, one more pullback on lower volume sell, as you can see. Pull back to 8 EMA, which is fine on lower volume, as you can notice right here. Another pullback, back to 316. That's a wide range bar with the volume. So we're doing candle over candle, bullish sign right here. First of all, the volume came in, selling stop, and we're doing candle over candle, possible pullback entry, and pushing back. I want to see increasing volume. You see the problem here a little bit, decreasing volume. That's not a good sign. But let's see what we're going to get there. 319. doji candle, a little selling, push through 320, a little rejection here over the high, closing still over the high. So remember, 321 is our first target. It's about 3R. You want to sell about 20% there, right? Take a partial, because if you take this as a day trade, let's say you take 100 shares, right? Take 100 shares, and you only, for the swing trade, you only supposed to take 30 shares, because you take $10,000 position, approximately 30 shares or 30 free shares. So you gotta sell into this trend, this day trade, to pocket some extra cash. So and here you go, we're getting a push, another pullback, holding the high on lower volume, another pullback, 319. Here's the push, 320, almost to 321. Need more volume for the breakout, almost to 321, right? So it's okay, sometimes don't wait exactly for 321, a whole number like this, and sell in front of it, which would be okay, like 10-20 cents before on a big stock like this, right? Big of a price stock. Doing another pullback to 320, a little deeper right now to the moving averages. Back to 321 push, and here you go, here's your 321. If you're patient enough, wait, you will get additional 50 cents. But you know, I would personally would be selling probably into these two dodgy candles. It's okay, you know, 20, 30, 40 cents from the top, that would be perfect with me. So now we're pushing over 321. So if for some reason we're going to undercut 319, so I wanna mention this, 319, we want to trim our position, 318.94, below this area, 318.94, that's where we bounce and consolidated. If we want to undercut 319 with the weakness and hold there, we're going to sell some into the weakness, right? Because you don't want to leave some money on the table, that would hurt. Let's go MCP, mental capital preservation. First time pullback below the moving averages, and first time moving averages contract here closer to each other. Okay, first sign of weakness. What is this? Big volume spike, lower volume push higher, big selling coming in on bigger bar, right? First sign of weakness, 321.76, you're getting a seller there. Okay, so we're getting a seller between 321 or 322, just something to notice. So next time when we come into 321, 322, maybe you want to sell some too, maybe another 10%, because we don't know, right? Here you go, 321, a little indecision. Here's the volume, big volume, boom, 321. I would sell some here, right here. This bar and this bar, it's okay to sell something there too. Here's another pullback, back to the moving averages, holding tight. Look at this, bigger selling, lower volume push. There is a sign here. There's another push on a lower volume, bigger volume sale. This is a sign for potential weakness. There's not enough buyers right now. Okay, you can sell there one more lot, right? One more lot. So keep in mind, the swing you have it, that's a swing. Whatever stop you're gonna have for that swing, it stays as a swing position. An additional cash you're generating here, it's your day trade type of position, right? It's indecision candle on a bigger volume, selling coming. Here we go. How do we know about this? Prior signs. Not only prior signs, but this was a sign, right? This candle was a sign. These candles were a sign. These candles were a sign for us, right? That's all signals. And that's how you could take this position. Here is the 319 undercut, stay in there, and then squeeze 322, sell some into the strength. Hope you guys learned something and you like it. Stay tuned, guys. Take care.